Hello, 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 everybody. Welcome to this webinar. It's really good to see you all here. Thank you so much for joining us for this information session on VC Lab. If this is your first time attending one of these events with us, my name is Mike Supervici. I'm the head of acceleration here at Desol Group. Desol Group's entire purpose of existence is to help new and emerging managers thrive. We do that in a variety of different ways. We do that through training, primarily through our VC Lab Accelerator, but we have various other programs to train limited partners, to train associates for you and things like this. We do that through tools. We have built the leading sort of operating system for venture capital. It's called Desol Hub. We do that through services. We have Desol Partners. That's become sort of the leading back office administration platform for new and emerging managers. And we do that through capital. We have a fund of funds as well as an LP network that invests in the top performing managers that come through our ecosystem. So if you sort of think about what we do as an organization, the entire purpose is to help people build enduring venture capital firms and try to reduce all the barriers to entry that you might see. But enough about us, enough about the company, enough about everything. I know everybody's here to learn about VC Lab, what it does, how it works, and everything about it. So before I get started and give you a little bit of a presentation here for the next, let's call it 10 to 15 minutes, let me just kind of give you some kind of guidance and some rules of engagement so that you can have a really good experience for this next hour together with me. First, on the right-hand side, you will see a chat window. You can go ahead and say hello. I see that people are saying hello and stuff like that. That's great. Keep doing that. That's awesome. We're going to be sharing links in there as well that are relevant to various questions that you may have and things like that. That being said, do not share, okay, what you're working on. Do not share your thesis for your fund or anything like that. That's a pretty serious general solicitation risk. And that this is a public webinar, so you do not want to do that. Okay. There's like laws against that. So please avoid that if you can. All right. Second, at the bottom of your screen, you'll see a kind of a Q&A button. It's got like a little question mark and things like this. We will be using the Q&A to focus on your questions. Okay, so I'm not going to be monitoring the chat. And so if you have questions, do not add them in the chat on the right-hand side. There's a Q&A button at the bottom of your screen where you can add questions, and everybody here can upload questions, and then we can sort of prioritize the questions that are most pressing, so that we can sort of help you with whatever questions you have about anything. These sessions are designed to be highly interactive. Okay, I'm gonna, like I said, I'm gonna give a brief presentation on how VC Lab works, what it is, what it does, but really, I want to spend most of this hour together answering your questions about anything, about the program, about strategy, about whatever the case may be. So get your questions ready and put them into the Q&A, and so you can go ahead and make that happen. Okay. All right. So without further ado, let me go ahead and get my screen, share my screen here, and let's get going with the presentation. All right, everyone. So what is VC Lab? All right. VC Lab is a free 4-month accelerator to help you close on your venture capital fund. Okay, this is a closing program. This is not a learning program. I want to be very clear about this. Sometimes you get a lot of confusion. It's like, I want to come into your program so that I can learn all these sort of aspects of venture capital. That's not what this is. We have other programs for that. We have a program called Venture Institute that teaches you kind of like basics about venture capital and stuff like this. But this is a pretty high-end program, and you're expected to facilitate a first closing on your fund, or if you've already done a closing on your fund, at least another closing. So that means like money in the bank. Okay. The other thing about this program that's sort of unique is that we help people launch enduring venture capital firms, not funds. Okay. Firms, not funds. This is super important. Okay. If you want to launch just a fund, maximum respect. This is not to try to say that what you're doing is wrong or something. It's not. There's nothing wrong with that. It's just that everything in this program is optimized for people that want to basically do this as a career and want to be in business for a long time. And you cannot be in business for a long time if you just launch a fund. And most investors, most LPs that want to invest in your fund are thinking about this. They want to see you actually have multiple funds under management and things like that. And so we're really helping people build an enduring venture capital firm. So in other words, we're helping founders of VC firms. Okay, so if you're like a venture partner in a fund, that's not really a good program for you. If you're sort of, just sort of part-time on something like this, it's not really the ideal thing. This is for founders of venture capital firms that want to build sort of like the next generation of enduring venture capital firms. And that's what we do. The program is free. You're expected to do a close, and everything that we work on and think about is we think about is like, even if you're on like fund one right now, every decision you make in fund one is going to affect fund two, and it's going to affect fund three. If you're on fund two, every decision you make in fund two is going to affect fund three. So I just want to make sure that we're sort of aligned on expectations right from the beginning, so that everybody understands the why and the how and how we think about everything we do. Okay. Now, just to kind of put this all into perspective, most people that want to launch a venture capital firm, it typically takes at least a couple of years, sometimes a year and a half, for people to get what's called a first closing done on their fund. Okay. And the reason for most of this is because people do things out of order. For example, some of you are probably on this call and you've already started talking to lawyers and started talking to fund admin providers. This is a really, really bad thing to do. In venture capital, unlike when you were probably starting a company of other sorts, incorporation is the last thing that you do. So this is an example of something that's sort of like out of order, and it could have major issues, costs. Oftentimes, you might have made such a bad decision that you might not even be able to launch the fund. And we see this happen a lot too. So what VC Lab does is that we package together all of the different steps that you need in order to be able to properly do a first close and launch your venture capital firm in a way that's going to allow you to scale it. And we iterate on this curriculum every single cohort, and we're on cohort 17 now, right? So 17 iterations of this, okay? And because of this, the average person that comes through our program is able to complete a first closing in less than 6 months, which is just super fast. And the reason for this, again, is because we sort of package everything and we tell you what to do at the right time. It's sort of like on rails. So you don't have to worry or think about like, oh, well, I should know about these other things. Like I should know about how to think about back office or something. Like that's like the last thing you should think about. You shouldn't even be worried about talking to lawyers and accountants and things like that, right? So by the way, if you're on this call right now and you've already started talking to some salesperson at some company about like your fund admin or something, please put that on pause. It is one of the biggest mistakes that we see people make, okay? You should not be talking to them until you have signed letters of intent of at least $1 million minimum from several LPs before you really want to start engaging lawyers and that kind of stuff, okay? And this is like advice. Hopefully you take it. We've seen a lot of people get super hurt by this, having to throw away hundreds of thousands of dollars in legal fees and stuff like that, okay? All right, so let's break this down even more. Okay, so in the first month, we're going to help you basically validate your thesis. All right. If you have an amazing thesis, effectively 1 in 5 limited partners, and for those of you who don't know what a limited partner is an investor in a VC fund, are going to commit to your fund. If you have a really bad thesis, it might be a 1 in 50, 1 in 100. So whenever you hear about people having to pitch like thousands of LPs in order to close, it's primarily because the thesis is really, really bad, okay? And so in the first month, you're going to be working on your thesis and you're going to be pitching LPs. And by the end of week 4, everybody's going to have hard circled commitments. In other words, signed letters of intent from limited partners. We call them pacts, okay? And that gives you a pretty solid validation of what you're working on is good, okay? Now that you have everything sort of validated and you know it's working really, really well, in month 2, now you can go out and develop a deck. Some of you on this call probably already have a deck. You're probably going to have to throw that away, okay? Because you probably are building the deck in sort of like the wrong way. It's super normal. It's not it's just like a mistake. It doesn't make sense for you to build a deck until you sort of have thesis, LP, market fit, okay? Like you need that before you go out and develop additional materials and do all this other stuff. So basically, once we get through sort of like the thesis validation phase, That's when you sort of start working on your materials. You ramp up your pitches even more because you know exactly what kind of LP you should be going after. You know exactly with what message you should be going after that sort of LP. So then your sort of conversion per unit of time is dramatically higher than the average person that's sort of kind of randomly going in the market, spraying and praying, trying to go after like any kind of person that would sort of like want to talk to them. Okay. By month 3, you're going to really start ramping that up. Okay. You're going to start thinking now that you're at this point, you're probably going to have enough commitments to start thinking about kind of like the operations, the economics, the legal, all that stuff. So we go really deep in all this work. And then by month 4, you're going to start closing. Okay. Maybe even sooner. Maybe even some of you are going to be on an accelerated track. Some of you are going to take a little bit longer. That's okay. That's why it's like sort of 4 to 6 months. But hopefully that gives you a sense of sort of kind of what the program is and how it works. Okay. The program's super global. So we get this question a lot. It's like, oh, you guys are in America. Are you guys like helping us just do American style fundraising or whatever? No. We've launched 400 VC firms all over the world. Okay. This program works everywhere. Okay. And we're super familiar. We're probably more familiar than most people with what you're dealing with in your sort of local ecosystem. Okay. So, you know, just know that this is working everywhere. This is not just like a program for you. Now, let's talk about some benefits, and I'll go into this really quickly, and then we'll wrap and then go into questions. Okay. So the benefit number 1 is that you've got this sort of very organized, structured approach that helps you focus on the right things at the right time and making sure that you don't waste your time on things that don't matter. Okay. In other words, the whole program is designed to maximize the return on investment per unit of time spent. And again, this is, if you come in late on this call, we're on the 17th iteration of this curriculum. We rewrite the curriculum every single cohort based on things we learned, based on market conditions that changed. All those different things are implemented into the curriculum so that, you know, you have like the most up-to-date sort of information that you need in order to be able to sort of succeed. Okay. Second, you're going to have weekly mentorship. So you're going to have an Ask Me Anything session with myself. You're going to have, this is typically on Tuesdays for this cohort. You're going to have a mentor on Thursdays that's going to come in. A lot of times they're going to be alumni that have we find those to be some of the best mentors because they're not that far ahead of you. So that you can really, really resonate with them and ask them. And they're going to be pretty raw about what they say. Okay. Because once you're sort of like in this safe space of like the accelerator, we can tell you things in a very direct way. Like, for example, don't talk to this limited partner because XYZ limited partner is a bad person, or it's going to like waste your time, or whatever the case may be. Okay. So the program itself creates sort of the safe environment for you to get like straight to the point, direct information from us. Obviously, I can't have a conversation like that with you here because it's a public webinar and you might share this out on social media or something. So you know, on a session like this, that's not really possible, but within the accelerator, that's definitely possible. Everybody takes the Mensarius Oath. Everybody, you know, takes privacy super seriously. And we make sure that none of this stuff gets out there in a public setting. So therefore, you just get sort of like the raw information because unfortunately in this world, there's just like a lot of BS, you know, and so you're going to get a lot of information from people that is just not right. And we're going to try to help you cut through all that. Okay. Third, you're going to enter a massive community of, you know, thousands of general partners, you know, and we're going to be breaking you up into working groups. So you're going to be able to meet other people just like yourself. We're going to be hosting socials so that you can meet other people in your cohort, which are going to ultimately become your co-investors. A lot of the alumni come back and they also help as much as possible. So you're kind of joining a very like the most high-end, you know, community of emerging manager there is right now in the world. And you're going to be able to sort of trade notes and hopefully you're going to be able to help each other out. In addition to that, everybody here is going to have access to Decile Hub. Decile Hub has become basically the operating system for venture capital, and you're going to be able to get it for free. It's going to be able to handle all of your outreach to your LPs. It's going to have email templates about what to say to them. It's going to have a purpose-built LLM that's built specifically on questions that we've answered. So just think about how powerful that is, right? Like we've probably answered, just myself alone, thousands of questions over the last, year and a half, 2 years of pretty much every situation that you've probably run into, probably every LP objection that you've probably run into. Now the LLM is able to sort of answer a lot of these questions for you, and we don't allow the LLM to go to the internet, right? So it's like super accurate. So you're going to be able to get business advice from our tools, from our systems. We do that through Decile Base. And then, the product itself is become sort of like the leading operating system for venture capital. So instead of you having to cobble together this stack of 25 different tools with like a Zapier integration, which is a really bad idea for lots of reasons, everything's sort of integrated into one place. So all of your deal flow, all of your investor relations, no need to spend a whole bunch of money on data room stuff. No need to spend money on an event platform, right? No need to spend money on like admin and ops, right? Like it's all like sort of like built into the product itself, and everybody gets access to that for free. Okay. And it's just working really well because it's purpose built to help you be super successful at your craft. Because, like I said in the beginning of this conversation, the entire purpose of existence of Decile Group is to help you be super successful at your craft, rather than to service you. So the entire engineering team is always thinking about like, hey, what can we do to help make your job a little bit easier? How can we help you convert LPs? So for example, the AI will literally give you a list of like LPs that you LP archetypes that you should be going after. Then it actually searches your LinkedIn for it, and then you're going to be able to sort of add those LPs into your pipeline to go after because they're like a good fit for your thesis, for example, right? Stuff like this is where all of our R&D is going with regards to the product, that everybody gets to access it for free. Second benefit is that, you're going to basically get access to our entire sort of, support system to help you build an enduring venture capital firm. We have built what's called at this Decile Partners, which has become basically the leading fund admin operation system for emerging managers. We have over 90 firms that we're powering right now, and it handles everything that you can possibly think of so that your fund becomes ultra safe for LPs to invest in at a very, very reasonable rate, so that you don't have to worry about variable costs and all these various issues that you're going to have. So again, this is all available for stuff for you when you're sort of ready. And we've kind of cracked most of these issues that you would generally have with regards to sort of support and business advice and things like that. And another benefit is that we've been building a capital network so that we can start moving money into your fund. We have a fund of funds that invest in the top alumni of the network, and we're also have an LP marketplace that it's starting to get quite a lot of traction because we're training a good amount of LPs on how to invest into your fund. Okay, so just on a high level, like the whole purpose of existence of Decile Group, VC Lab, and everything that we sort of do is to help you become enduring. And to build an enduring firm, you have to be able to get through to Fund 3. You just have to, right? That's how, and then you're kind of off to the races. A lot of, your ops are going to work pretty well. You're going to, what you're sort of doing, you're going to be in there for a while. So everything that we're doing, our entire R&D, from training, the systems to services to capital, everything is built to help you be super successful at your craft. Okay. All right. So I'm going to stop right here. And what I want to do now is really get into your questions. Okay. So if you join a little bit late, there is a Q&A button at the bottom of your screen. Go ahead and ask questions into the Q&A, and I'm more than happy to answer any questions that you have about anything. There's also an upvote system where you can hit the little like thumbs up button, and then I can go ahead and try to prioritize those. So there's a question here from Naresh. While reading VCR, so there's a free program and a premium one. I'm not sure what the difference is. To hear the difference with the benefits of being premium. Yeah, so the way we think about VC Lab is that we want to try to give as many people, and I see there's people trying to like raise their hand. This is a webinar. We're not going to be able to answer questions when people are raising hands. So add them into the Q&A. We wanted to give as many people access as possible, because we really believe that if we can launch a lot of firms that are ethical, like the whole entire ecosystem is going to perform a lot better and be a lot better for like the future of humanity, right? So our VC Lab has always been free, will always be free, and that's how we think about this, because we want to give people access. Now, what happened was that a lot of people came to us and said, "Hey, Mike, I would really like to spend a lot more time with you. I would like to spend a lot more time with your team. I need some more like advice in this certain area and things like this." So we created premium packages because that requires time, effort from our team to provide you with more hands-on sort of support. We have a plus program, which is designed to basically kind of help you in more like a group setting. And then we have a platinum program where we're sort of giving you like one-on-one advice. All these programs are on our website. Totally optional, but we just want to make sure that we can give you the custom level of support that you need. And of course, that's sort of the point for that. So you can read more about them in the chat. Is it a good time to raise as an emerging VC fund? Yeah. Look, most of the stuff that you see online is not accurate. So let's just start there. So there's like this whole like, I don't know, doom and gloom cycle on Twitter about like how difficult it is to raise for emerging managers and blah, 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 blah. And all that information is rooted in bad data. It's like, it's rooted in like PitchBook data. PitchBook has some of the worst data there is when it comes to emerging managers, and it just cannot be relied upon. Just to give you a sense, like during that sort of doom and gloom time, which again is getting way better now, by the way, like I'm also just seeing significantly even more activity when fundraising. Even during like the worst of the quote unquote doom and gloom, we were seeing record numbers of closings with regards to the VC Lab community. Now, the problem that most people have is like I try to kind of talk about in the presentation. Most people are just doing things that are just not smart or not optimal for what they're trying to achieve. Like I see a lot of people who have, too high of fund sizes, for example, that, I've seen too many people like try to go to market with a really bad thesis. I've seen a lot of people target the wrong LPs. And that's just not, that's what leads to a lot of the inefficiencies that you sort of see in fundraising, right? And so if you sort of focus on the right LPs at the right time, you are going to be able to, do a very successful closing. And I wouldn't sort of worry about it too much with regards to the fundraising ecosystem, because a lot of the stuff you're reading is just not right. Whereas for us, like we had literally we saw the most number of like fund closings we've ever seen sort of this year and towards the end of last year. So, it's all about like how you pitch it and who you go after. For GPs who are active, would this program be appropriate? Yeah, I mean, pretty much most people that are coming into this program are actively fundraising. These are literally, and so that's what this is for. You're going to be like literally getting signed letters of intent from LPs in like week 3 and week 2. Okay, it's at that level. Okay, this is a fundraising program. You're expected to do a closing at the end of the program. That's the whole entire expectations of this. And I've talked about sort of how the program helps in my presentation. I see this question came in very early, so hopefully I answered some of that with regards to the presentation that I gave you. Is there a target fund size for emerging managers that would allow us to close a fund slightly and easily, quickly? Here, so everybody's different. So, and everybody has different access to networks. So your network and your network is going to define your fund size. Okay, so I'm not sure where you're at in the process, but assuming that you're like on a like a fund one, I'm just going to make, and I'll talk about this on a fund two if you guys want as well. You know, who's going to invest in your fund? When, like, who's going to invest in your fund? It's going to be people in your network that know that when was awesome, right? That's who's going to invest in your fund, because it's a very risky kind of proposition. So you going to random people that don't know you and expecting to get money from them is just, it's possible, right? But from a return on investment per unit of time spent, it's very, very complicated, right? So it's like you're going after the wrong people at the wrong time. And this is because, like, just think about what you're doing, right? You're going out to investors and you're saying, hey, investor, invest in my fund, okay? Even though I have not managed money professionally before, even though I'm going to be investing in these super risky startups, and you won't get any money back probably for like 10 years, right? It's a pretty big ask, right? Now, look, I mean, I'm trying to kind of cut to the chase here. This is why I'm, trying to exaggerate a little bit here with my points, but I hope I'm at least making a case here for why this is super hard to do. So what you got to do is, so who's going to invest in something like this, right? It's going to be people in your network that resonate with the thesis that you're working on. That's who you're going to go after. And so that's what's going to determine the fund size. And this is how people mess this up so badly, because most people are very confident in their ability to fundraise, and they set these crazy numbers like 20, $30 million, even though you like are on a fund one and have like not ever invested in, or have never like managed money professionally before, or you've managed money professionally before at like another, like a CVC or something, but then you can't take your track record because you don't have any attribution. So you're basically in just as bad of a situation. And you're trying to go out and raise 20 to $30 million or euros. Well, that's pretty hard to do, right? Because you're going to need people to put in $5 million in your fund. And those types of LPs are prevented by charter from investing in your fund because they don't do new managers, right? And so you got to focus on like high net worths primarily, right? And maybe some small family offices. So then you'd kind of do the math on your networks, like what does that actually look like? And you're going to be like, well, I think a reasonable fund target for me is 5 million. Okay, right? And now you can oversubscribe that. So whatever fund target that you have is the minimum amount that you know with confidence that you can raise, that you can sort of oversubscribe on. What most people mess up on is that they make it as like a target, like it's a stretch goal. And then they end up undersubscribed. And when they end up undersubscribed, they have a really hard time raising fund two, fund three, fund four. Okay. So that's how you sort of want to think about this. And for the emerging managers on this call, a similar process happens, except that you're going to be looking at your current LP base in fund one or fund two. And then you're going to look at sort of like your relationships as well. And then that's how you're going to determine the fund size. I think, again, hopefully I've answered this question for you too, Sam. I'll say this on like the economic side of things, like where like the math stops working. If you're raising a fund that's based in Delaware, 2.5 million is probably the smallest fund that you can raise and still make the math work. If you're going to put your fund in any other domicile in the world, that number goes up dramatically because the cost of operations are really high. This is why actually most new managers now are just skipping all the minutia and just going into Delaware. It's happening in Europe, it's happening in Southeast Asia, that kind of thing as well. So hopefully that's something. Is the program suitable for building a venture studio? Yeah, we have a venture studio track, but it's really designed for venture studios that are going to launch an adjacent fund. So there's two types of ways to launch a venture studio. One is you kind of build a holding company and then you raise money into that holding company and then you sort of deploy that into startups. There's nothing wrong with that. That's perfectly fine. The second way to do it, which is typically how these sort of larger, more established, more enduring studios are built, like the Science of the World and things like that. They're called like the dual entity model. And basically they have the holding company and then they have the VC firm attached to that on the side. And then the VC firm invests in like the best ones or all of them, depending on sort of their structure. The program is not really good for people that are building just a holdco. Okay. We're not going to be a good fit for you. I just want to be blunt with that. We're going to be really good for people that are doing sort of like the dual model, where you're actually launching a VC firm that's attached to the studio. Would this be the right path for if with no VC experience? And I'm going to state this on a high level here. Yeah, I mean, most people don't have VC experience. There's very few people that have VC experience. And like I said, we launched 400 venture capital firms. I don't know. I mean, maybe 10%. I mean, it's like a super small world of people that worked at a VC that are spinning out to launch their own firm. And they actually have, in many ways, a harder time than you do. Because most of the time, they can't take their track record with them. So just think about that. You're going out, you've spent 20 years or 15 years as a corporate venture capitalist or whatever the case may be, and you can't get any attribution for any of the deals that you've done. Right? Pretty hard to raise money when you have that, right? So a lot of times they have a really difficult time raising. Now, there's exceptions to every rule, right? So this is not a one-size-fits-all approach. But I'm just trying to give you this so you, because it doesn't sort of really matter. What really matters is that you have an edge, that you have access to companies, that that you have the ability to overperform against the hundreds of people that are on this call, against the 400 plus venture capital firms, that you have like a unique edge that allows you to be super successful. And if you do that, you're going to be able to raise a fund. Hey, everyone, we have 22 questions in about a half an hour. I would super appreciate it if you go through and try to sort of upvote the questions. That would really help me prioritize which ones I should go over versus just sort of kind of going through these kind of back to back to back. Question here from Luba. I was recommended your accelerators. I'm planning to launch a VC firm. I looked at what I have a strong connections with multiple VC, but operate outside VC in the space. Do you take solo GPs into the program? What's your view on that? Yeah, most people should be solo GPs. So let's just start there. Okay. It is one of the worst things that can happen is that you partner with a person that you don't know really well. And this isn't like a startup. So in a startup, you have like these very nice vesting schedules. It's sort of manageable when a co-founder leaves. In a VC firm, you both are owners of the firm, and the limited partners are investing in the individuals. They're not investing in your strategy, whatever the hell. They're like investing in Luba, right? Literally. And so when the managing partners break up, generally the firm falls apart. Okay, it's super risky, and you're about to, if you decide to go down this path and say, I'm going to go launch a VC firm, you're going to be in this for the next 15 to 20 years of your life. Fund one, going to be 10 years with 2 years extension. Then you're going to have to raise a fund two, otherwise you're going to be out of business. Then you have to raise a fund three, otherwise you're probably going to be out of business again. So each of those funds is going to extend that out. So now you're looking at like 15, 16, 17 years of time that you're dedicating to basically launching this firm. And so I say this because if people are partnering together and they're saying, I'm going to go ahead and launch this firm, you're basically making a commitment to be working together for the next 15 years as a team. Okay. And if you haven't spent extensive amount of time working together in the past, extensive amount of time where you've seen each other kind of through hard times, through good times and things like this, the probability that this relationship is going to work out is very low. And if the relationship doesn't go out, it's like death to the fund. Okay. So most people end up being solo GPs. Over 60% of the firms that we've launched are solo GPs. And solo GPs can then hire like a general partner, maybe in fund two or fund three, fund four. And then if they become very good over time, you can promote them into the management company and be a managing partner with you. You sort of seen that in like the larger firms do that kind of process, but it's pretty dangerous to sort of co-found a VC firm with somebody that you don't know really well. So don't worry about it. Most people are going to be solo anyways. It's part of how it works. Can you comment on your LP network more and how many introductions you generally facilitate for funds, please? We don't facilitate introductions for funds there. If you're trying to join this program to get introductions to LPs, you should not apply. Okay, let's be very, very clear about this. This is not what this is. And let me also be very clear about something, because there's a lot of scams and a lot of bullshit out there right now. No program is going to be able to get you really strong LP introductions. Okay. Because think about what you're doing, right? You need to sort of match like the perfect limited partner with the perfect general partner with the perfect thesis. And that's sort of how magic happens. Okay. You may be able to meet a whole bunch of LPs, but who the hell cares if they're not going to be committing to your fund? Okay. They're not going to be committing to your fund. And so that's why most of these things are scams. It's by definition impossible for brokers or any type of like program like this to match emerging managers with like really good LPs, because these LPs cannot make a quantitative bet on your fund, because most of you don't have track record. I don't care if you've been super successful syndicate lead or whatever the case may be, that doesn't actually count as real track record for a limited partner. So they're making a qualitative bet on Darren. They're saying, hey, I think Darren's going to be able to be able to succeed. Okay. And that's just crazy hard to do, right? Like if you're sort of like trying to match people, right? It's just crazy hard to do. And so this program is not going to do that. Okay. You're not going to like, this is not designed this way. You're going to be pitching people in your network primarily, because those are the ones you're going to be able to convert the most. And then your networks of networks are going to help you get more LPs. And that's how you're going to get the fund off the ground. Okay. If this is a fund one, and if it's a fund two, you're going to leverage your current LPs in fund one to find more LPs. And that's how you're sort of going to get to that next level of introductions and things like that. Now, the program itself does a lot to shortcut that for you. Like, Hub's going to be able to literally give you LP archetypes to go after within your LP network. So you don't have to like sit there and like figure out how to search your network. We're going to give you what to say and how to say and what at the right time to the right person, so you can have a much higher conversion rate than most. And to be blunt, you're going to meet some LPs, because like we are featuring LPs as mentors and things like this. There's a bunch of LPs in the community. A lot of the GPs are LPs, right? So you're going to meet some. But if you're going into a program like this, or any program, I should say, with the expectation that you're going to get LPs, and if people are selling that stuff to you, you should just be very wary when you hear that kind of stuff. You should just be like, oh, this is something weird, because that's like literally, I just explained it to you that this is impossible to do. Now, let me tell you sort of what we're doing to fix this for you, all right? Because I think this will help as well. So we're working on building out a marketplace, okay? And the way our marketplace works is that we take the best alumni, and these are generally alumni that we power with our back office offerings. So we know that they're incredibly safe, that they're basically like super locked down, and they look like a freaking Fidelity. Okay. And then at the same time, we're training a whole new set of emerging LPs on how to invest in new managers and emerging managers, how to make these qualitative bets. And then we feature the best performing managers in this marketplace. And so that when an LP goes out and meets with these folks, they know that they're ultra safe, that the only bet that they have to make is that Darren's going to be a great GP. Okay. And this sort of marketplace is starting to work. Okay. But everybody on this call is very far removed from that. You have to finish the program. You have to do a first close. You typically have to be powered by us for me to even sort of be able to crack this, right? Because the only way you can crack the sort of GP to LP stuff, you have to have super high quality of GPs, super high quality of LPs that are not going to be wasting people's time. And then you have to figure out which LPs like what kind of funds, and then serve them those, right? That's pretty hard to do. And so, we're doing this at a small scale, but you should not be expecting that as part of this VC Lab Accelerator. What kind of KYC measures are available on the platform? And also, when should one focus on going after institutional investors? Super good question. full, like if you work with us in the back office, full-blown compliance, KYC, AML, all that's built in. And there's an entire compliance layer that's built on top of that. So it's not just KYC and ML you got to think about. Every like wire that goes in and out of your fund must be tied to a contract. Okay. This is like actually compliance one-on-one. This is how money laundering happens. Like somebody might set up some kind of entity somewhere else and make their capital call through some other random entity, and then they're basically money laundering money into your fund. Okay. And so our team and our system basically prevents that, so that so that you don't have any issues with this. Because if the bank finds this out, they're going to just shut down your bank account, and then you're in real trouble if that happens. So the whole program and system does all of that in sort of Decile Partners. It's all integrated into the back office offering. When should you go after institutional investors? Typically, you want to sort of go after institutional investors after you've done a first or second close. You at that point, you will have done some deals. You will have some deal memos. You're a lot less risky now, and so that's when you sort of start that process. You're likely not going to get them in fund one, just to be blunt. You might get some, but you're likely not. But you're at least setting those relationships up for fund two. Okay. I see there's a question coming into the chat. Stephanie, I'm not answering questions in the chat, so can you move that into the Q&A, please? Thanks. I have my high net worth network in different countries, mostly India and UAE, but I might set up the fund in Ontario. Will I get legal support for figuring this out? Yeah, we support Ontario funds. So right now we support Delaware, Ontario, BVI, and we're going to launch likely Estonia in Europe. Okay, so yes. The issue that you're going to have, though, is not the Ontario stuff. The issue that you're going to have is actually the stuff that you're going to ask is actually is mostly India related, because you got some pretty gnarly, like repatriation laws, and that's actually where most of your problems are. They're not really like domicile related. Okay. How many fund managers do you take per cohort? Around 250 or 300, something like this. What's the upper limit you'd work with for a first-time fund? It doesn't work like that. Like, I mean, we've had people with large targets, but what we'll do in the programs, we're going to just have you reduce it. Because again, you can never be undersubscribed, Prem. It's impossible. If you become undersubscribed, if you say I want to raise $100 million and you end up with 80, you're in real big trouble. Like all of the LPs in the next fund, they're going to write fundraising risk in all of your deal memos. Okay, this isn't like a target. Like you have to be able to like actually raise the money, right? And you have to be able to have the track record to be able to raise that kind of capital. And again, the higher the fund size is, now you're starting to take a different style of LP because they're putting in tens of millions of dollars and stuff like that. And most of those people are prevented by charter from investing in new managers, because at that level, those LPs are all about risk mitigation versus upside. So in other words, they could lose their job by making a bad investment. So they're just like, oh, it's just so much easier for me to just put my money into like an Andreessen Horowitz. Okay. It's safe. I'm not going to make that much money, but at least it's safe. I'm not going to lose money, and I'm not going to lose my job. Okay. So that's those are sort of the forces that you're kind of dealing with until you become enduring. So fund 3, fund 4, at which point you can really start to go after these bigger like endowments, more institutional sort of grade LPs that can put in that kind of cash. This is just a general rule. There's exceptions to everything. So you might have a different situation on your hand, but whatever you do, set the target lower than you're targeting and try to oversubscribe. Okay. You can never, ever become undersubscribed. If you do, you're in real trouble. Okay. How do you identify if some corporations and LSP, especially as LinkedIn? In Hub, once you're in the program, we're going to be able to send you like LP archetypes that make the most sense for your thesis. And then it's going to do a search for you in LinkedIn, and you have like a Chrome extension where you can literally drag and drop like the best people into your Hub, and that's how you handle it. But it always works best working from like the thesis out versus like here's like I'm funding clean tech, well, you should probably talk to like LPs that care about clean tech, right? That kind of stuff. But you're going to look for people with money, high net worth individuals, people that can be able to invest in something like this. Executives, ex-founders, that kind of stuff are some things you can kind of look for to see if they're a good target for you. All right. If I already have a fund, is this program right for me? The fund raised 30 million and we're already invested 8 million to emerging market. This is my first fund. It is, Stephanie, if you're going to do another closing on this fund, if you're going to not do another closing and you're moving on to fund two, then I would say come back into the program when you're ready to launch fund two. We have an emerging track that's specifically built for people like you. And that's the time you want to do it, because this is a fundraising program. We're going to spend like 90% of the time on like pitching the right LPs at sort of the right time. And so that's really what this is about. And so it sounds like you're pretty much done here, with this raise. And so you probably want to just, I would say, come back for the next fund. But I'm not really sure where you're at in the fundraising cycle. All right. How much does track record impact the effectiveness of the process? Do angel investments count? Yeah, I mean, you're going to try to find whatever data you can to show that you're uniquely qualified to succeed on this thesis. The issue that angel investors have is that they typically tend to invest in all sorts of stuff and they don't have a lot of focus. And so the hardest time you're going to have is trying to find like, where's the focus or that's going to create an edge for you to super succeed. So for example, if you made 10 angel investments and 5 of them were in clean tech, maybe you have a clean tech focus, right? That kind of stuff. And hopefully those were successful too. And that sort of proves that you're like uniquely qualified to succeed. But that's how you sort of leverage it. How interested are you in edtech in Nigeria, Africa? We launch a bunch of funds in Africa. We're huge in Africa. I would say most of the new funds are coming through the VC Lab program from Africa. And I'd say typically edtech is a tough market for VC in general, but there's a lot of opportunity in Africa with edtech just because you're sort of like rebuilding the entire infrastructure from like a different place, like it's almost from first principles or something. So you might have more potential there, but it still comes down to like, your ability to like have access and be able to find these incredibly giant outcomes, and making a case for it. So it's not about us. Like we're not like thesis specific. We're not like, oh, we like want to find more funds in Nigeria that are focused on edtech. It's more about like the manager. That's kind of how we think about our admissions process. And speaking of that, everybody just before we wrap here, early admissions deadline, okay, for cohort 17 is Monday, November 18th. Okay, so that's coming up, right? So I encourage everybody that if you're sort of interested in joining, apply sooner than later, because what ends up happening at the end is we just get slammed with hundreds of people, and then it just becomes harder for the admissions team to sort of prioritize folks. It always happens this way. So that's what we have an admissions deadline. So if you're thinking about applying, try to apply before, okay? Will you help with structure? Yeah, we help with structure. We talk a lot about structure. With funds, they're typically going to be in certain domiciles. It's very rare that people are going to do anything local. It's almost always a bad idea to do something local because you just don't have enough of a market of providers to help you. And so therefore you just get bad work that's too expensive. But in general, yes, we do. And we talk a lot about that during the program. Can we revise our applications when it's submitted? Yes, you can. How do I increase more letters of intent? Is there any network of LPs in the Caribbean region? Yeah, I don't know if we have LPs in the Caribbean region, but the key to conversion of LPs is like I said, it's like thesis, GP, LP fit. Okay, when like the perfect GP works on the perfect thesis and meets the perfect LP, magic happens. And so you're sort of on this like fact-finding mission where you try to find the people that resonate the most with what you're trying to do. And so that's how you sort of try to convert the best folks, and you try to find folks obviously with money and try to make them to get them to believe in your vision. Now you have to obviously prove that like the next iconic company is going to come from your ecosystem, or that you've had access to iconic companies that have come from your ecosystem in the past to show that people to encourage people to come in. But that's ultimately what it comes down to. So you're going to have to spend a little bit more time on finding that LPGP thesis fit. What is the general investment you see in fund ones? Typically, what's going to happen is in fund ones is that you're going to increase your minimum investments for LPs with each closing. So in your first close, your minimum is going to be like 100K. Okay. Then when you go into like later closes as the fund becomes a little bit more de-risked, and this is for high net worths, by the way, it's going to go up to like 250 or something like that. For family offices, you might have a minimum of 500 and it goes up to 1 million and stuff like that. That's typically what you will see in a fund like this, and as you continue to raise, you'll raise the minimum size, and that's how you keep the LP count really low, even though the laws basically say, hey, you can only take 99 investors. You really do not want 99 investors. That's an absolute nightmare. You want like 30, 40 type and max type of thing. So that's how you want to think about this. In your application, you ask how many high net worths LPs are in my network. Should we count both strong and weak ties? Yeah, I would do both. Are LPs open to adding existing private investments into the fund instead of cash? Yeah, so what you're talking about here is called warehousing. There's literally a warehousing component of this cohort where we talk about how to warehouse and how to move assets into the fund. And yes, this is typically a way to de-risk the fund significantly, especially if those startups have been marked up quite a lot, right? Now, it's like a gift to the fund, Aaron. You're giving up 80% of your upside because you're going to move them into the fund at cost. You're not going to be able to move them into the fund at the next valuation or whatever. But it significantly de-risks the fund, and this is a pretty standard kind of procedure that people do to kind of de-risk the fund for LPs. So this happens all the time. Is there a set period of time that Decile Hub is free to participants? Nope. There's like features in there, especially if you kind of want to work with us in Decile Partners. So a lot of the back office for that, you do have to apply because we only want to work with like the people that we know we can power and how they want to kind of work with us, So, that is the one area where that is paid, but the rest of it is free. Okay. Are you seeing any interest in evergreen model? No, nobody here should be doing an evergreen fund. This is it just doesn't work in VC. No one's been successful with running evergreen in VC. It's it's like incredibly difficult for you to value these assets. Like in VC, it's like they either got marked up or not, kind of like, and that's how and is it a price round or not, And that can take a long time. So it's really hard to help people trade in and out. And, you're already doing something that's incredibly difficult to do. Like, I can't stress how hard this is to do, And then you're like, hey, instead of doing like this kind of classic 2 and 20 fund, which most LPs are very familiar with, okay, let me just, introduce this other crazy model that nobody understands how to really in venture capital. Like, you're just making this incredibly hard for you. You're taking the entire pitch from being all about like Darren and this amazing thesis and this sort of emotional like decision about investing in your fund and what you're doing to like this concoction of a structure that literally doesn't work in VC or no one's been able to prove that it works in VC at all. Right. And you're like trying to say, well, I'm going to be like successful like this and that. It's just, it's really hard. It's just not going to work, So we're not open to it. if you're doing an evergreen fund, I'll just be blunt with you. We're probably not going to let you in unless you're willing to change. Because I don't want to like have to deal with this during the program. They're like, no, don't do an evergreen fund. Don't do an evergreen fund, right? So, because again, we're trying to help you get to a close. And then what ends up happening too is that you've just basically told the market that I do not want fund of funds. I do not want institutional LPs. I do not want family offices. I mean, so you're kind of only allowing yourself to raise from high net worths too. So it's just tough. It's just like a tough thing, and you're not going to be successful in the program as a result. What kind of mentors do we work with? So we have a lot of like ex-alumni GPs that have been very successful through the program. We feel like they're some of the best mentors there are just because they're not that far ahead of where you are currently. We also feature several LPs. We also feature a ton of like operational folks later in the program where we talk about accounting, compliance, legal ops, how to manage lawyers, all the stuff as we're getting closer to closing. So we have those sort of like the gamut of profile of mentors that you're going to have. Okay. Did I say if I want the VC, I should consider Delaware as opposed to other jurisdictions? Yeah, Delaware is like the least expensive and most efficient place to put a fund, period. I mean, everything else is going to be incredibly complex. It's a major regulatory burden. There are some instances where it makes sense. So I don't want to, it's not like a one size fits all type of approach, but the vast majority of people, and again, over like 60% of the funds that we power outside the United States, most are in Delaware. Just, some people are doing Ontario. That's also not a bad option. But just the complexity is just in any other region is crazy. It's crazy expensive. It's just not even affordable for most people. So, yeah, I think I mentioned this. Will this work for an open-ended rolling hedge fund? No. This is not. This is for VCs. Okay. Again, maximum respect if you're going to run a hedge fund. We just don't have the expertise to give you advice on how to do what. And sort of this rolling evergreen fund model does not work with like enduring VC firms. It might work at the angel level. There's like some mixed results with that on AngelList. It might work, in more when VCs become more like private equity like light, which is effectively what Sequoia is becoming, right? Like in some cases, right, for their like very large kind of investments that they're going into like the public markets with. But for emerging managers that are trying to build enduring firms, you can't really do it as an evergreen fund. It's basically impossible. All right. Awesome. So we made pretty good time, everyone. There's a question here. I'm in Calgary. I'm open to Delaware. How will this impact taxation? Yeah, so if you're in Calgary, Naresh, I would put yours in Ontario. I'll just be blunt with you because it's just better from a tax perspective for you. And Ontario is a major domicile. What you don't want to do is put it in Calgary, okay? Because what happens a lot in Canada is that a lot of people want to kind of put them in their own province for various like tax reasons. Don't do that because basically now you're saying, hey, I only want to take people from Calgary. What you want, what you want is to put it in Ontario because that's like a global domicile, which allows you to take American investors and all these other things. So that's what I would do when you're ready. But again, this is like the last thing that you do. Get over 1 million in hard circled letters of intent from LPs before you even put any thought into this. It's just a waste of your time and a just poor return on investment. So just put time into like actually, like getting the fund off the ground. Do you support that? No, we don't support that. We only support VCs. All right, like literally, just that's it. That's not really a venture like model. All right, everyone. Hopefully this is helpful. Again, early admissions deadline, November 18th. If you're going to apply, I recommend that you do that. It gives the admissions team a lot more time. Okay. All right, everyone. Enjoy the rest of your day. Bye. Hopefully this is helpful. Bye.